Welcome everyone. Welcome to another episode of Wealth Talk by Vivekam. So in our series Wealth Talk, we try and tackle topics about the economy, about equities, about mutual funds, about your investments as a whole. So make sure to check us out where we try and attempt to do some of these sessions every week to give you a roundup of where things are, what the most recent developments are, and more importantly, what you as an investor need to do to make sure your portfolio or your investments are on the right track. So first and foremost, this is the first video that we are doing post the elections. Of course, a lot of people had a lot of hopes that, or not hopes, but predictions that the BJP alone as a single independent party would get the majority and they may bulldoze policies, they may bulldoze reforms, of course, in the benefit of the nation. But of course, that did not happen as we recently saw the results. So with the addition of two, three, four regional parties, definitely that is going to be an added strength because all these regional parties also are looking out for development of their own state and of course as a country as a whole. So before we dig too much into policies and how the growth forecast is looking for our economy and maybe particular sectors, so Mr. Prasad, maybe you can tell us how should we assess this recent kind of development about the elections? Does it have any impact to play in the economy, or are we reading too much and trying to gather too many conclusions from stuff like news that usually come to us last as a retail investor?
No, Yashwant, we need to understand the people that they are aligned with BJP. Are they progressively minded? Are they kind of, only concentrating their minds only on distributing the freebies? Unfortunately or fortunately, the people that have been elected by the electorate in the India are very nice people. For example, from Telugu states, Chandrababu Naidu has always been hailed as a visionary and then very progressively and business friendly, and so is the case even with Nitish Kumar, who has been able to break the shackles of the jungle rush in Bihar in some time past, and then he was always progressive. He was trying to develop the people en masse. So obviously, except the flip-flop in the political affiliations, Nitish Kumar also is seen as a progressive. Having these two parties out of the other parties who do not share the same vision is an added advantage to the country. So I don't have any reason to believe or kind of disbelieve, or doubt the capacity of the present dispensation to pursue the policies that they have been doing for the past. So I think all in all, it is good for the country, and I'm sure it is going to do well. And apart from that, we also need to understand the gods also have been kind, as at least as predicted now, because IMD has forecasted an extremely good rainfall for the country, above average for this year. That means rural India is going to breathe fresh life. These are all the things that are going to be considered for economic upliftment of the whole country.
Right, like you said, specifically with India being still very dependent, India's economy still being very dependent on agriculture, better monsoon bodes better for our rural economies. That means there is more discretionary spending that will be done through rural economies. That means there is more consumption, more production, more activity, and overall should point to better signs for our economy, especially for some sectors more than other, but definitely as a whole for the country, definitely in the right direction. So before we dig into too many things about industry, especially we want to tackle pharmaceutical industry and cement industry in this video, talk a bit about their prospects and more so talk about a couple of stocks within those sectors that we believe are poised to do well. Let us just get a snapshot of where the economy is, where the growth forecast is in terms of the overall country. Like we have seen, Indian debt is attracting more and more numbers from foreign institutions or foreign reserves, probably due to our government bonds being listed in the emerging market bond index. That means there are more inflows coming, and usually when inflows are coming to our economy, like I think we touched upon it previously also, we talk about money being multiplied whenever there is country in investments coming into the economy. Definitely, these are all strong signs that, along with higher savings from our senior citizens to the tune of around 35 lakh crores versus around 14 lakh crores around by 2019, all of these are showing good, strong signs. We have seen demat accounts increasing, mutual fund inflows increasing. Like there are a lot of things that are at least showcasing to be positive, but of course, we need to have caution and figure out how much weightage we need to give to one or each of these factors. But when how maybe that is a better question to frame, like how much of weightage should we as an investor or a retail investor contribute or add to each of these different topics, and get an overall picture of where the economy is going.
Yashwant, there are certain things that we need to be very clear in our mind and we also in our expression, because you cannot probably assess or have an assessment of what is the weightage of each and every factor that you intend to know or intend to read in the newspapers and make some sense out of it. So if the economy is going to do well because of monsoons, we cannot say index will go by 180 points. That kind of precise calculations or estimations are absolutely useless. And if somebody claims that they know it, they're actually lying. So we do not want to resort to that. At the same time, we also need to understand when the factors are all positive, like what you mentioned, apart from the rainfall, and also the kind of rising savings in the Indian community, and then kind of foreign inflows coming to the debt market, and because of that money multiplier effect. For instance, if 1 lakh crores come into the Indian debt market, because debt markets stay for a longer period, they are not equity market like. So they don't go out immediately. They just normally stay for about 10, 15, 30 years. When 1 lakh crores come into India, that increases the GDP by approximately 7 lakh crores because of the money multiplier effect. 7 lakhs GST going up means an average of 12 to 18% is the GST rate. So 18% GST on 7 lakh crores is equal to almost like more than a lakh of crores. That means overnight, because 1 lakh crores coming into the India, almost government tax revenue itself will go by 1 lakh crores, which will add to the capacity of the government to spend on the infrastructure. Now, when we say the government will get more money, the worry in most of the people, at least in the foreign investors, was, will the money be properly utilized? Will the money actually result in economic upliftment of the country? For that, there is a yardstick called incremental capital output ratio. What does it mean is, if we spend 1 lakh crores extra on the economy, if it results, let us say, just imagine a situation, if it results in 25,000 crores of GDP addition, I am again spending. If 1 lakh crores is coming to the government as savings from savers, and if that money is being spent on the investment in the infrastructure in the country, suppose the GDP goes up by 25,000 crores, that means it is going to be said that the incremental capital output ratio is 4. That means total investment divided by GDP rise. That will give you 4. In fact, everybody should be better off. BJP government is not my favorite party or not my disliked party. But when they do good things, we have to appreciate. When they don't do good things on the economic front, we have to criticize. The incremental capital output ratio before BJP government came to power was around 7.5 in the country. That means for every 1 lakh of rupees, 1 lakh crores invested in the economy, only 7,000 crores was being added to the GDP. But now, fortunately, because of a lot of elimination of corruption, elimination of bogus identities, public distribution scams, everything is being attended. Because of that, now the incremental capital output ratio is 3.5. That means for every lakh of crores spent as investment by the government, 35,000 crores is going to be added to the GDP. So that is very, very good. That means indirectly we can say, if government spends 10 lakh crores over a period of 3 or 4 years, 3.5 years time, it will recover the entire amount in the form of GDP. This is a very good sign. That is why people around the world are liking India and praising Modi, and then also praising the Indian public. Now that the verdict also is clear, that though the government is working with a reduced majority, it is stable enough, not going to be disturbed by anyone in the near future. So with all these things put together, I think the economy is on a very sound wicket, and I'm sure it is going to do very well.
Right, Mr. Prasad. So with this, let us just get into some industries and their prospects. Usually in these kinds of weekly videos, we try and tackle either industries or specific stocks that have recently given results, and then we give our view and we analyze the results that have come out, and we give our view on whether this stock is worthwhile for an investor to consider into their holdings, or whether this particular stock is now deemed to be overvalued and it makes sense to sell at this juncture. So make sure to not miss out on this kind of section of the video. So Mr. Prasad, let us try and cover pharmaceuticals and cement. First and foremost, pharmaceutical sector normally perceived to be a very defensive sector. So in the recent fall and of course subsequent rise in the last few days again, How much of an impact has that had to pharmaceuticals specifically? And more importantly, how is pharmaceuticals as a whole boarding or faring in terms of its numbers, its fundamentals, and expected kind of growth forecast that we have? Maybe you can touch upon a few points on that.
Sure, Ashwant. Pharmaceutical industry is, as you rightly put it forward, it is mostly considered as a defensive sector. When the whole market goes down, the market pharmaceutical industry will stay very firm. And if the whole industry is actually booming, the pharmaceutical industry will not participate. Pharmaceutical industry has not been in the limelight for quite a long time, but now the time has come for it. And during the recent fall, that is on Tuesday, when the market tanked by almost like 6% in one day, the pharmaceutical industry did not go that much steeply. In fact, when we look at the kind of defense and railways, which were considered to be the most favorites of the BJP government, they both went down by as much as 30% in one day because everything has gone down. But pharmaceutical industry did not do that. Just to give you a perspective of how pharmaceutical industry has been doing in the last 3 months' time, that is after 31st March results, just starting before March because results would have been known to some interested parties and insiders. So that's why I'm trying to take the statistics from March onwards to June. If you try to look at that, in the 90 days before this date, that is, we are doing this video on Friday, that is on 7th of June, their maximum market capitalization seen by the pharmaceutical industry was 16.79 crores. And I'm only including companies that have got more than 5,000 crores in my consideration. I am not trying to add all and sundry 1,000 crores, 500 crores companies. I don't want to touch. I am only touching on 5,000 crores and more. If you look at that, the maximum market capitalization was 16.79, and then what was the lowest? 15.21. So how much it has gone up in the last 90 days was only 10.36%. It went up only by 10.36% in the 90 days. How much it has gone down in the recent fall? The worst fall was again 10.22%. That means it has not gone down more than what it gained in the last 90 days. So that is a good factor. Now, if you look at the graph on the screen, on the right extreme, you will understand that the market started inching up. That means pharmaceutical industry is now gaining the attention of the people because it was the one industry which withstood the recent turmoil also. That is why people are looking at it. And now, to give a perspective of where these 40 companies are positioned now and how much is expected out of these 40 companies. If you look at the right side, the two columns, current market capitalization of these 40 companies is 16.64, whereas they are expected to go up to 21.94 or 22 lakh crores, which means almost like 5 crores and 5 lakh crores is the potential left, which is more than 30% of the current market capital. At an industry level, 30% gap to go up from now immediately will spark attention, and we will be craving to understand what are the companies that are worth picking up. I understand the anxiety of investors. Now I'm rolling into the next screen where I'm going to show the companies which are considered to be the most favorites according to our analysis. And again here, I'm limiting the analysis only to the companies which are more than 5,000 crores and which are in growth and which are either approved or waiting for my approval to be included as the top favorite in the whole market. Now, if you look at this, out of 39 companies which we considered here, 27 have done well. That means 70% of the companies have done well, and they increase the profit by an average 13.09%. But when you look at the right side and the top block here, you will see only 3 good bets. Please don't get confused, because the people who are watching our videos for the first time, I want to tell them these good bets are the companies that are approved by us to be in the top 10 or 20 in our list. Because every day we take the top list of the companies from all the industries, not just from one industry. We don't do the analysis of only one industry. When investors come to us, we tell them, you have to ask for an opportunity to make money. Don't try to concentrate or focus only on one industry, because you may be losing opportunities from other industries. With that idea in our mind, we push some companies into the approval list only when they come into the top 30 in the order of priority. If they are not in the top 30 by order of priority, they will be waiting in the queue. For example, if you see Zydus Life Sciences, we see a 2.79% is the profit sales rise, but profits have gone up by 29%. And the gap between the current market price of 1,049 versus 1,522 is 45%. That means it has got 45% scope to grow. But unfortunately, by the time it announced the results, there were a lot of other companies which have announced the results. They may have got a higher scope of, let us say, 50, 60, 70% to their expected price. That is why they go into the top 30. That is the reason why this company has still not asked for my approval or for our approval. When we say not yet in the okay to buy, it does not mean that it should not be bought. It is only has not come and figured it in the top 30 for my all the investors who are actually seeking the data from us. So that is what you need to understand. Next is Dr. Reddy Laboratories. We advise the company to all our investors. They bought in large quantities. They're holding it. They should continue to hold it. For that, the gap is now from 5,949. The potential market, because according to us, expected market price is 8,478. It is expected or fair price. According to us, based on the fundamentals, this is the fair price decided by our model. That is 42%. As I go down in the list, next is Alchem Laboratories with 40%. Alembic Pharma is also with 40%. Jubilant Pharma is 38%. Sun Pharma has got 36%. And Lupin also has got 36%. JB Chemicals also has got 32%. As you would notice, these were the companies which were covered in the green color. That means unless the gap between the expected price and current price is 30%, we don't recommend. So these are the only companies which we are recommending. This is not 3 because only why approved was only done for 3. The top block was showing 3, but actually there are 7 or 8 companies. 8 companies are top of the list, so you can safely consider them for your buying if you are a do-it-yourself investor. If you are an investor already registered with Vivekam and then following our advices, you don't need to worry about any of this analysis because you will be advised whenever you want to invest money, what is needed to be done with your money, how much quantity in what company, what sector, everything would be advised. Customized personal advice will be sent to you without you asking. That's the difference between do-it-yourself and then dependent investor.
Right, Mr. Prasad. So next, let us try and cover the cement sector with some clarity emerging now at the center, and this government and this kind of alliance traditionally showing a lot of importance to infrastructure in the past, and I'm sure also in the future. We have tried and done some analysis on the infrastructure sector independently, and I've seen that at least traditionally what we have thought that it would grow X percentage, Y percentage has not materialized yet. That means there is still value to be had. And with now clarity being there at the center, cement again is like one of those allied into infrastructure. So with clarity emerging and not enough growth, or at least not as much as growth already seen, is cement sector something of a worthwhile industry to look at now?
Definitely, yes, because the government will have a priority set on laying the roads, building the ports, building the airports, building and railways infrastructure. All of them require cement in large quantities. Unfortunately, infrastructure also has not gone up too much. And because of that, the dependent industry of cement also has not gone up much. But now the rainy season has started. So the demand for cement is likely to be subdued for some more time, maybe around 3 months' time or 4 months' time during the monsoon time. But once that is over, the renewed thrust, because of the increased cash flows in the form of GST collection and other things, and also increased savings from everyone in the country, the government is flushed with money. What they do is they try to create infrastructure. As we already discussed, this government is avoiding or kind of controlling the corruption to a greatest extent. That is why every rupee is going to be spent on the real creation of a public assets. Having said that, cement cannot be ignored because without cement, you cannot build a port, without you cannot lay a road, you cannot do any infrastructure projects without cement. Now, in cement industry, one thing we need to understand is a company that has set up its plant, maybe 5-10 years down, it may have written off most of the depreciation on the assets. That means their cost of operations or operational cost to produce a bag of cement will be smaller than a new jumpstart. Right now, it's a new company which is going to set up a plant. For these companies which have set up plants, which have got old plants working and running for successfully, then the top line goes up, the bottom line goes up dramatically. So what we need to understand is we wanted to find out among the cement industry again, what are the companies which have got more than 5,000 crores market cap. When you look at the slide on the screen now, you will understand there were 10 companies which have got more than 5,000 crores market cap as of today. And as you can see, the lowest market cap of that was 1,30,000 crores and highest it was 158. That means in the last 90 days, it only saw an appreciation of 22.58. But after that, as you see in the graph to the right, it has already slid from those high levels. So it has come down significantly. And now in the last few days in the market mayhem, it went down by only 14%. So that means when the market rise was muted, obviously the fall also will be muted when the market completely melts down. And what is the current market cap of these 10 companies put together? It is 1,45,000 crores. According to our estimate, according to our model, where we normally try to predict the market expected market capital of each and every company based on fundamentals, we have given a value of 2,22,000 crores to all these 10 companies put together, leaving a gap of almost 75,000 crores or 70,000 crores. That means it's more than 50% of the current market cap. That means cement industry has got very good prospects, and definitely some companies out of this 10 should be considered as investment worthy by anybody. Now let us jump into the list of companies which are part of this list, which are actually eligible to be invested now. As you can see my screen now, I listed only 5 companies. Why? That means just because I said 50% is the scope for cement industry, all companies do not qualify to be investment worthy. The company has to be doing well, increasing the profits, and the price should be definitely minimum 30% lower than the expected price. Only then we call them investment worthy. As you can see from the screen now, Birla Corporation is one company which has increased by 2% in sales, but the profit went up by 34%. That is why it is one of the top most favorites for our analysis. And what is the market cap? What is the market price now? 1,463. What is the expected market price? 2037 based on the available fundamentals. I am not even trying to look into the future. Available fundamentals justify a valuation of 2037. So the gap is 39%. And don't worry about not yet, because as I already told you, because the results have come a little late, by the time this company results came, a lot of other companies have come. So they are always occupying the position of top 30 in the list. That is why it has not been approved, but actually it is waiting for approval. So the green color means this is investment worthy if you want to buy a cement industry and if you want to do it yourself. And next is JK Lakshmi Cement. That actually sales have gone down by 1.18%. The profit has gone up by 10.72. That means operational efficiency is clearly visible. So this company has got a scope of 31%. If any one of you feels that why 30%, even 20% is good bargain for me, I don't mind buying it, then JK Cements is 3% sales have gone up, margins have gone up by 16%. That also has got about 26% scope to grow from the current market price. Like that, next company is Ramco Cement has got 24.82. Up to that point of time, up to those 4 companies, if you are going to be happy with around 20% return, you can comfortably consider them. Please remember, these companies, as I told you when I was talking about pharmaceutical industry.
Right. So that is the kind of analysis we usually do in our videos. We try and tackle particular industries. We look into specific stocks. We give our view on the fundamentals. We give our view on what we believe the fair price for a particular stock is. And then we rank all of these companies together to give you an overall picture of which companies are worthy, some more worthy than others, and not due to any other reason or not due to any other future forecast, but more so analysis purely based on the available data. So that is what we do in our weekly wealth talk videos. So I hope this was useful to you guys, and make sure to again tune in for our videos in the future. Thank you.